What's going on, everybody? Today, we're going to be talking about the top real estate headlines. We're going to be jumping into the coach's corner. We're going to hit you with the DMV real estate report. We're going to jump into the hot or not, and then we're going to hit the comment section. Welcome to the Real Estate Wire, folks. What's going on, everybody? I'm Dan, the realtor.
Mortgage Coach Marcus.
And today, we got a special guest. We got Nelson Fuentes from Keller Williams Capital Properties. What's going on, Nelson?
What's going on, y'all? How y'all doing?
Good, man. We're good.
Good, real good, man.
So one thing that I don't want to even talk about in this whole show is how tall you are. Because I think it's corny. It's corny to talk about how you're like 6'8" and you stunting on everybody.
He's only 6'5".
No, on your driver's license. On my driver's license, I'm 5'7". There ain't never been no 5'7" a day in my life.
So you guessed it though. That's you. You lied about it. Yeah, I didn't lie about my height. If anything, I was trying to keep my height down. I was like, yeah, I'm 6'4".
Height privilege.
They don't bother me. I mean, I'm around basketball players.
Height.
You're like 6 feet?
I'm 6 feet, but I'm around basketball players and football players all the time.
He's 5'11", but yeah.
Hey, man. Hey, look.
Go in.
We already had that conversation. What's up, man? So what do you love most about, tell us what you do, where you are, what areas you farm, and what I want to know is also what brought you into the business.
I'm a licensed in D.C. and Maryland. I primarily do business in PG County, Montgomery County, and D.C. typically. Okay. I've been in the business since 2018. I got licensed when I was 19 years old. So
really,
yeah.
Wow.
So like, what got me into the business was mainly just seeing my uncle being successful at being an investor, and so I figured, all right, I don't got the capital for that, so let me figure out a different way in making money in real estate, which was just becoming a real estate agent. And I figured if I am going to become a real estate agent, I could help him get his deals, and then just go build off of that.
Where's your uncle do deals at primarily?
Montgomery County, PG County, DC. So pretty much those areas that I service. Yeah, yeah.
Are y'all a team or you?
Nah, not necessarily. I mean, we've had like 3 deals together, but not necessarily. He goes about it his own way. So he just builds up his portfolio whenever like the market is sort of bad, pretty much. Yeah. So he was buying up properties the last couple of years, but he had taken a break a good 5 years before that.
So we know that. Shout out to your family and my family, and you know, sometimes working with family can be a gift and a curse.
Yeah,
right?
yeah, literally, yeah.
So how's that dynamic like?
So I'd say at first he didn't trust me. Like when I first began, I say at first when I was, because he was like
reasonable.
He was well experienced. He had agents who had been killing the game for years now, and I like Googled their not Google, but I like searched up their stats, and I figured, all right, that's respectable because you just respect their experience, their knowledge, and the business that you've done with them. So you're willing to keep doing business with them. And at this point, he just threw me like the smallest. You know, to see if I could do it. Literally, that was pretty much what it was. He was like,
"Can you list this?" He's not going to give you like $1 million deal. Like,
he was like, "Can you list this one for rent?" And I was like, "Yeah, I can rent this joint out for you." And then after that, it was just like, "Can you help me buy this? You know, this 2-bedroom condo for like $100K?" And I'm like, "Yeah, I can help you buy this 2-bedroom condo for $100K." Like it was just very small deals, and now we're working on like single families, and so we're seeing how that relationship worked. But so far, it's been good. I used to actually work for him before, so I used to be one of his employees. So it like the relationship just kind of has been improving basically.
He watched you grow.
Yeah, literally, yeah. So
help you grow.
Yeah, exactly.
That's actually interesting that you say that because that ties into our first real estate headline.
What's the headline?
So one thing I think is really been happening in the market is, you know, a lot of people getting priced out, and as we all know, buying is way better than renting. Jumping on a train
100%
is way better to jump on it, you know, a few stops ahead than to try and catch it once it's already taken off from the station.
Yep.
And so this article from Keep It Current Matters talks about the reason to consider condos in your home search. And it's one thing that I've been talking to a lot of my clients about, which is, like, I know you know, wealth is built over time. It's built slowly. Slow money is the only real good money. And if you got to live somewhere, you may as well, you may as well own it, right? Because then you're putting a little bit in a piggy bank every single month, and it's growing at about 5 to 6% interest, or whatever. However the house appreciates, whatever the market's doing, right? But it's way better than a savings account, which is paying like 0.1%, right? And the dope thing about condos is that you can get in for a much less expensive price, and you can still build that equity, but you getting something as opposed to just waiting and hoping that the prices come down.
Yeah.
Exactly.
Only thing I don't really, I mean, I'm with you, and I bought a condo. That's how I really got into the game.
I know what you're about to say.
The condo fees. Because like
Yeah,
from our perspective, like clients pre-approved for 300,000, let's say, but in their mind they're thinking single family or townhome, right?
Sure.
Which has an HOA sometimes, all the time with a townhouse. But then the HOA might be $100. But if you go condo, the condo fee $250, $300.
I mean, I was looking at a condo over in Baltimore. They want like $1,800 for the condo fee.
But
that's not normal. Yeah. That's not normal. And
that's
so
more than a mortgage.
Well, now let's ask this question though: What are the other home ownership expenses? Like, if you were to price it out line by line, right? You got to pay for yard maintenance. You got to pay for snow removal. You got to pay for maybe you got to pay for your HVAC when it to get serviced. Mm-hmm. When you have a condo, all of that stuff is taken care of for you. It's kind of built into the condo fee.
Well, you're talking about like the lawn maintenance, trash, that type. And sometimes you have like minor utilities.
Exactly. So, sometimes utilities are included, and I mean, if you're paying $1,800, I would at least expect all utilities to be included, and probably more. I want a pool in that bitch.
I need you to wash my dishes. I need you to wash my clothes.
$1,800 is abnormal. Now that condo, the reason that condo was $1,800 was because it was unwarrantable. I don't want to go too deep into warrantable versus unwarrantable condos, or maybe I will. So when you have unwarrantable, I'll make it brief. A warrantable condo is one that will accept FHA or conventional financing.
There you go.
An unwarrantable condo is one that will not.
I taught Dan really good. Go ahead, keep going.
Yeah, you taught me.
Let's see what else you got.
You did tell me that. You did teach me that. So anyway, he coached me very well. So why would a condo? Let me ask you this, Nelson. This is a quiz. You're getting quizzed.
Yeah, all right,
surprise! It's a real estate intervention. Surprise! All right.
Bring back everything from the real estate exam that we did.
Yeah, exactly. See if you really studied or if you just click C the entire time like I did. So, why would a condo, Nelson Fuentes, be unwarrantable?
I mean, you just said it right now. I mean, why would it be
delinquency?
Delinquency rate. The delinquency rate has to be. It's too high.
Yeah, exactly. So, what's the other reason?
Too many investors, not enough owner occupants. Yeah,
exactly. Yeah. So if it's like a unbalanced, what they call the owner occupant ratio. Yeah. Why is that though? That's what I know why, but I don't know why. Why they care?
So 5149, right? Or actually 5115, right? So those are kind of the rule of thumb. 5115. So what you want is 51% of the units to be occupied by the owner, right? When you buy
the owners of the condo,
right? Mm-hmm. Right. That's the 51, and then from the 15 relates to the delinquency ratio. So you don't want any more than 15%, and sometimes it's even squeezed down to 12%.
Condo dues delinquency,
right? The delinquency percentage, you don't want there to be any really more than 15% of the condos to be delinquent under condo fees, because if you have a higher level of delinquency of condo fees not being paid, then what does that mean? That means that the amenities, the pool's not being taken care of, the grounds are not being taken care of. You have a higher risk of potential lawsuit liabilities, and
and that's bad for the lenders.
Well, it's bad for the people that are in the community, because you got kids running around. Mm-hmm. If nobody's taking care of the grounds, then everything's growing up. And I've seen there was actually a couple of communities where I've seen them actually close their pools and things like that. They'll pour cement into the pools and dirt or whatever and let it grow and just be whatever they make it, because the owners of the condos, they continually fell behind on the condo dues. Yep. Yeah, and they could not keep up the contracts with these other companies. So they were like, man, let's just shut this pool down.
Yep.
But what's the risk to the lender?
The risk
why do they care? They getting their money.
Well,
that's what I was always wondering.
The property itself. So I think it's more of a Fannie Mae, Freddie Mac, FHA question, because it just makes if you kind of dial it all the way back, it makes the property itself a high risk, and because it's not being taken care of. And
probably you would have like more foreclosures, more delinquencies,
yeah, for sure,
more people moving out because the property's crap.
And that's why you get into when there are loan products that are available for non-warrantable condos,
but you got to put down a bag.
Well, that's that non-QM space. That's what when you get into
QM for us in the cheap seats.
My bad. Non-qualified mortgage. A qualified QM is qualified mortgage. So a QM loan is Fannie Mae, Freddie Mac, your conventional FHA, USA. That's a USDA, VA. Your non-qualified or non-QM loans are your more creative loan products, where you're looking at like the bank statement financing, foreign nationals, non-warrantable condos. So non-warrantable condos, you're going to pay. If the market rate is 6%, 6.5%, you're going to pay 8% as your interest rate at least. And if your down payment as a first-time buyer 3%, you got to come in the door with at least 10% on a non-QM situation. So
okay. That makes sense. I mean, sometimes you could tell when those communities are already like, as soon as you drive in, you can see like the grass not being cut. You can see trash all over.
The shoes hanging on the telephone wires.
Yeah, nobody's used the tennis court in the last like 6 months or anything.
You got grass in your tennis court. It might be a little bit of
Maybe we need to look at another condo. All right. Well, let's get into the next topic. Let's get to Coach's Corner. What you got for us, Coach?
Good segue into Coach's Corner. A couple of things. We're still on the roller coaster with the interest rates. One of the things I just posted a few minutes ago on my Instagram, the Fed funds rate went up from 4.75 to 5%. What that means is the banks borrow money from one another overnight, and they're paying each other back. And that money is going towards or how it's impacted to our consumers, impact your credit cards, equity lines, your CD rates. Did I already say credit cards? Auto loans, things like that. So that's what is immediately impacted by the Fed funds rate moving up and down. It doesn't always immediately touch your mortgage interest rates. So when it does trickle down to the mortgage rate, sometimes it goes up. Well, in this situation, the rates have been sitting at about 6.75.
The mortgage rates.
Yeah, mortgage interest rates sitting about 6.75 for your conventional and around 6.25 for your FHA.
So when the Fed raises or drops rates, it doesn't automatically affect your mortgages.
No, it takes about what, like a few weeks, or?
It can take days. Or a minimum probably average about maybe 3-4 days.
But eventually it will.
Yeah, but it eventually can catch up. Now, because of where we stand with inflation rates and all the reports and things like that, you're talking about what we saw is rates were here at 6.75 or 6.25. They dropped down. Now we're at like 6.5 for conventional and like under 6% for your government FHA and VA rates. So what does that mean for the consumer? Man, get your applications in. Yep. Make sure you have all your documents into your loan officer and get pre-approved and get out here and shop for a home. And if you are already under contract, do not ride the roller coaster. Like this is good money.
Yeah.
Lock that rate.
Yep.
Lock that rate.
What are you seeing on your end, Nelson? You specialize in rentals, right? Or you just do a bunch of rentals?
I just do a bunch of rentals. I don't particularly specialize in them. I just happen to have a lot of people that aren't ready to buy just yet. So
but you playing a long game though, bro.
Yeah. Literally, I'm trying. I've had at least, I'd say, a good 5 rentals end up purchasing properties after, maybe 1 or 2 years, 3 years in a rental. So it's like I'm nurturing my babies, basically. It's like, raising them and stuff. Yeah, it feels fun. It's a really fulfilling, experience, at least for me on my end. I'm sure it is for them too, just to be able to rent a property and then a couple years later end up buying something. You got to, like, as a real estate agent, all we're doing is just educating them and just providing the ideas and the vision. Really, a lot of times it's them doing all the work.
Yeah. You really can't make anybody
literally
a particular apartment, and you can't make anybody buy a house. So they either want to do it or they don't.
Yeah,
right?
Literally. Yeah, we just provide the facts.
I think like our jobs as real estate agents is to basically do what we're doing right now. Stay informed of the market, inform our clients of what's happening in the market, and then, be there to answer any questions that they have about the market.
Mm-hmm.
Literally.
Everything else, like we don't control the rates. We don't control whether the house sells. We don't control... On the listing side, we kind of control the price, but then we have clients over there too. And it's like, all right, well, we got to negotiate with them. Like, hey, I think... I was talking about this on Nick Bush podcast. Also, go ahead and check out Real Estate Explained podcast. Check out this podcast.
Nick Bush and them.
I was on their podcast yesterday, and we were talking about, what do we do when sellers want to sell their house for a little bit too much money, like an unrealistic price. And, I was like, what I typically do is I use a three-prong approach. You can either price your house high. And that's what we call the needle in the haystack approach, right? You're looking for a very specific buyer.
Yep.
That usually works if you have a very unique property, right? If you have a house with a really unique view of the Potomac, and you're independently wealthy or you're well off, and you don't care if it sells or not, right?
That's Daniel Snyder's house.
Danny Snyder, exactly, right? You're fine as long as you put it on, whatever. That's the pricing that high. Then the third the second approach is to price it right at fair market value with everybody else. That approach is going to get you, it's going to get you a lot of showings. It's going to get you a good amount of showings, but it's not going to really do much to differentiate you from all the other properties on the market. Then the third pricing strategy is pricing it slightly below fair market value. This is usually where you're going to end up in a multiple bid situation. And it's also the scariest for most homeowners.
Because what if you price it low and it doesn't sell for whatever the reasons the buyers don't like it? Now you got to drop it even further, right?
That's the
dangerous. Yeah, that's the dangerous part.
And here's the answer to that: you don't have to accept the offer just because somebody sends it to you.
Correct.
So if let's say for example we got a $500,000 house, everything else in the neighborhood selling for $500,000. Well, let's say we price it at $590 or $597 or $596 or $497 rather, right? $497, $496. Okay, if somebody brings you an offer for $496, you're not going to take it. Or if somebody brings you an offer for $480, okay, we can counter it, right? Mm-hmm. But most of the time, in my experience, I've seen it happen the opposite way, where the buyer's agent knows that, this house is priced. It looks really, really good, right? It's nice, it's updated. Why the heck are they pricing it so low? So what typically happens is you create a sense of urgency in the buyer's mind because they go, this house is dope and it's priced under everybody else's house. Plus, I see all these other people standing outside waiting to get in. We need to go hurry up and submit an offer. And usually in my experience, what has happened is we get more than one offer. We get, like 3 or 4. Yeah. Sometimes we end up with 17 like we was doing back then.
And you just leverage and get them to outbid each other pretty much. Yeah.
Mm-hmm. Yep.
Yeah, that's understandable. I can see a lot of. Have you had situations where the seller's like, you know what? Let's list it at this price, but I'm not taking any offer at this price. I'm listing it at this price so we can sell it at more than that.
And it's understandable. Like when you have a house, you're gonna be emotionally attached to the joint, right? Mm-hmm. And so in your eyes, your house is way more valuable than everybody else's house, even if it's about the same as everybody else's house. I understand that because I feel the same way about my house. Mm-hmm. And that's our job as real estate agents, is to look like as an objective third party and say,
realistic.
Yeah, I feel you. Have you thought about this? Right? Are you okay with your house sitting on the market for a longer period of time? If so, let's go ahead and price it wherever you want. But in my opinion, I think the ideal price based on the numbers is we price it here.
Exactly. Okay. That makes a lot of sense.
Now let me ask you this, because not to hang on to the rental space, do you ever have clients that are actually renters that legitimately are going to rent, but then they see a property and they're like, they don't think that it's worth the amount of rent that's actually being charged, in the same way that
everything is negotiable. Yeah. So I've negotiated rental prices all the time, especially when they've been sitting on the market for a while. And at that point too, they're willing to take a renter who's not, 100%, really qualified for this property. So sometimes even if the credit isn't, the best, or a lot of times their income is good, because the income is really what matters to a lot of these landlords. Is as long as you're making the money and paying the rent, I'm fine with the credit being a little bit, off of what I was looking for. But and then at that point, that's when I'm like, all right, then let's negotiate the price too, because this would make it even a much more seamless transaction or seamless experience for both of you guys if we can find a reasonable rate where they could afford to pay it. And then keep in mind, they don't want to be here forever. So look, just have this tenant in here for a year, 2 years, and then I'm going to help them buy. And then you can go ahead and price this property wherever you want to price it right after. And you can keep on moving with your life. And my client has their property to purchase afterwards. So
Do either of y'all ever, I get this question or scenario probably about once every 4, 5, maybe 6 months. It's about this rent to own option. Right.
Yeah.
Y'all ever,
I do get questions about rent to own.
And in one sense of it, I could explain it, but like I'll say either one of y'all, maybe you.
I'm not a fan of it. What about you?
I'm not a fan of it either.
Built in, like whatever your terms are about the person at
the end, literally. So it's not. You can't foresee the future. What if this, what if this property isn't worth that, 2 years later, and you already locked in on a price? So that's.
You ever heard of a company called Landis?
I have. Yeah. That's the one that does a lot of those rent to own?
Yeah, they do.
That's the one we talk about
and I did. It wasn't really. And now I know there's probably a bunch of realtors that's gonna say I use Landis and it's dope. Holla at me, jump on the pod, because I'm definitely open to learning. Yeah, I'm definitely learning the new to change my mind when presented with new information. So the information that I have right now, I wasn't really excited about it because I felt like it cost a lot. It cost about the same as if they were going to buy.
Yeah.
They wanted like 15 bands up front. Their credit had to be at like a 6. I think they weren't tripping off the credit, but I know they wanted like a significant amount of down payment, and they were like, we don't. And then
the rate is high too.
The rate was higher.
Yeah.
And I was just kind of like, okay, y'all could just stay where you at and stack that bread.
Yeah.
You know.
And then the other thing too is it's very limiting options. So like wherever the properties are that are available for rent to own, they're like in places where you don't want to fucking be at.
Well, the only thing is that Landis is a little bit different. And that was one thing that attracted me to them because they basically let you buy any house that you want to rent.
Interesting.
Yeah.
Okay.
So like say you're looking at 123 Main Street, then what they do is they buy the property from the owner and then they rent it back to you.
Okay. Interesting. So that's a whole different ballgame.
This is the company that Jay-Z owns it, right?
Yep.
Oh, okay.
Yeah.
Dang. Okay. Jay-Z's out here in the real estate space.
Yeah, he's getting in the bag.
He got that, and he also has the the self-lender account. You know what self-account is?
I didn't know he was doing lending too.
Yeah, I know self.
It's not lending, but what it is it's you go into the bank and you want to get a certificate of deposit, which is a CD, right?
Mm-hmm.
You give them $1,000, whatever, and they hold it for 6 months or 12 months or whatever. And at the end of that, it's accrued interest, and then you can take that whole thing and roll it over to another CD, or you can cash it out at the end of the term. Well, if you go to, I think it's self.com or selflender.com.
Yeah, it's good for credit building too.
Yeah, so you basically, they say, okay, well, I'm gonna commit to a $1,200 CD, and then every month, there's 12 months in a year. Every month you make a $100 payment, and at the end of the year you got $1,200. But every time you made that $100 payment, they report that $100 to all 3 credit bureaus, and then that impacts your credit score to show that you're making timely payments on this installment loan.
Property. Okay.
Yeah, and it's a good.
It's really good. I recommend it to all clients, not all, but most of the clients that need it.
Sounds like a good program. Yeah.
And he has one similar to that.
Yeah, I've never done a rent to own transaction. I've done a owner financing where like basically the owner is basically the bank in a scenario, and I've
never done owner financing.
Yeah, it saved the deal for me, that's for sure, because the lenders dropped the ball on that one.
What's his name?
Wasn't me.
What's the lender's name?
Wasn't me.
It wasn't Coach.
Yeah, wasn't him.
Name names.
But no, the lender dropped the ball, so I ended up just I was about to like really call it quits because I didn't know what else to do, and then I just brought up to the owner the entire situation that was going on. We were I think 2 weeks under contract when the lender dropped the ball. And
how did he drop the ball?
He didn't. He said that they were pre-approved. You know how some lenders just give pre-approvals out and they're not supposed to do that. They're supposed to none of that. They're supposed to verify everything before they hand out a pre-approval.
They go on their word.
Yeah, exactly. That was
you make $2 million a year? Yeah, sure, good enough.
And so he was making good money. He had good credit, but he didn't have any Social Security. So this was a I-10
Social Security number.
Yeah. So this was an I-10 loan.
You do a lot of those, right?
Yeah. As of
That's
late,
a non-QM space.
Yeah. And so essentially, I basically just told the owner the entire situation that was going on. Basically asked them for, forgiveness, trying to get the EMD back and everything. Please. And then they were like, look, I've done owner financing back in the 90s. Talk to your clients, see if that's something that they'd be willing to consider.
Nice.
I'd be the bank, and then they go ahead and still purchase the property. And if anything, at that point, I wouldn't need 20% down payment. We can go ahead and do a 5-10% down payment, save them a little bit more money off the top. So it ended up being a much better deal for the buyer.
Yeah.
They bought the property. It was a 5-year balloon, so it's actually about to come up in the next year or so. So he has to pay the rest of the loan off, and then that property is his. Yeah.
You know what? You have not, my mom always said, you have not because you asked not.
Because you asked not.
It's a great job of like just asking, because a lot of realtors wouldn't have asked the question.
Or just being real. And then somebody else could probably bring the idea up. Because I didn't even know that was a thing to do at the time. Yeah. Now I know. And now if that ever happans to me again, I'll just say, hey, how are you financially on your end, Mr. and Mrs. Seller?
Yep.
Let's try to make this work.
I'm gonna talk about the difference between a pre-qualification, which is what that guy had, versus a real pre-approval.
On the Coach's Corner podcast?
On Coach's Corner. So y'all tune in, iTunes,
make sure y'all
Spotify.
check out the Coach's Corner podcast, available on Spotify, iTunes, all streaming platforms.
Because if you have a pre-qualification, you shouldn't be out here shopping for houses.
Facts. Because it ain't worth the paper that is written on. You have no money, to be honest with you.
So let's get to the local DMV real estate market report. We're going to keep this short and sweet, just like me. Hey, I'm gonna start saying that from now on, yo. I like that. That came out nice.
Short, dark, and sweet.
Short, dark, and lovely. Just like me. So, interesting. The numbers came out for February. Here locally, like we always say, real estate is hyper local. So you may be paying attention to your national news, but what's happening here in the DMV is going to be very different. So, for the month of February, the total sold volume is about $2 billion, which is up 32% from this time last month, and it's up 21% year over year. So the total amount, dollar amount that we've transacted real estate wise is up 32%. The number of closed sales also up 28.6% from last month, and it's up. No, I'm sorry, it's down 24% from last year. So last year we're down 24% as far as the number of closed sales, which is reasonable and understandable, and exactly what is supposed to happen when you increase interest rates because they're trying to reduce inflation. We all know that. The name of the game is the inflation, right?
But prices going up is basically what you're saying.
The number of transactions is going down, but the prices are still going up. So the median sold price is up from this time last year. The median sold price for February of 2021 was $535,000. That was the median sold price for the DMV. The median sold price this year is up 1.7% and up 7% from January.
In the last 3 months.
This is February.
So it's month over month.
Yeah, it's up 7% from January. So that kind of goes against the I'm gonna wait for prices to come down buying strategy.
Oh, yeah, the numbers don't lie. And like we were talking about, like it's literally been a seller's market because the 1.38 months worth of inventory. Right?
Yeah, I mean, you said it yourself. You still seeing multiple offers where you at?
Like it's but it's around here too. Like
yeah.
I mean, I'm not in a different. Well, I am a different state, but it ain't.
But you still DMV. Like I think Nick Bush said he just got one that was in multiple bids. I hear a lot of people talking about it, and it makes sense when you look at the numbers. The median sale price is going up, and the average sold price is up year over year, 2.3, and up 3.7% from this time from January of this year. We're up 3.7%.
Yeah. If you're a realtor listening or watching, put in the comments whether or not you're seeing multiple offer situations. Say yes I am or no I'm not, because we just need to know. And people need to be informed, because the reality of the market is that it really is a seller's market and it's aggressive out here, and prices are going up as the numbers show. It's a spring market. I mean, spring is sprung. Right? Yeah. So people are naturally going to be out here anyway.
Yeah. Exactly. And I mean, the thing is about spring market, but I think we was talking about this on Nick's pod, which is I tend to think that spring market versus winter market thing is kind of like a myth.
It used to be a real thing, though.
I mean, I don't think it ever was a real thing. I never experienced it because I always saw everything kind of be relative, right? So there was more buyers out, so we did have more transactions.
Maybe it's relative, but also it depends, because during the winter you get the most serious buyers, so it feels like it feels like it's the same market, but in during the summer you just have a whole bunch of them.
Yeah, exactly. I mean, if you got buyers coming out like in the snow, these Bama's trying to roll straight up.
And I think when we talk about the spring market, like it's because of the volume, the activity.
For sure.
Because I think, let's face it, when school starts, it tends to die off a little bit. You feel like a little,
because you don't want to change school districts.
Yeah, you feel a little bit of a punch in October, but when you hit November, because you slide into Thanksgiving, and then nobody wants to move at Christmas time. Mm-hmm. But then again, you got some people like, hey, if I can do it, I need to be in by
Christmas. I need to be in by
December or whatever. Yeah, bro, it's like a
New Year's and stuff.
It's like a 3-week grace period.
Yeah.
Like it goes like this. Well, traditionally, I don't know what's going on now. Post-pandemic, everything is all over the place. Yeah. But I know historically, it used to go like this. You go spring market, everybody rich. Bang it, everybody doing stuff. Then around August, everybody leaves town and they go on vacation because they're waiting around July, rather, like end of July, last couple weeks. Vacation. It slows down a little bit, everybody goes on vacation. Yep. Then it picks up again around October to Thanksgiving. Mm-hmm. After Thanksgiving, you're done. Do not put your property on the market after Thanksgiving. Then you have a 3-week grace period from Thanksgiving to the beginning of Christmas where you're going to get a whole bunch of activity. Mm-hmm. Then after that, you're in no man's land.
Yeah, that's down again. Yeah, that's crazy.
And then when the rates are lower, you have the refinances that are happening at the same time that purchases are happening. So for that environment, it stays super, hectic because you got people trying to hurry and refinance, and then wait the 3-day rescission period and get their money because some people refinance so they can have Christmas money. I've had that happen a number and the Christmas money not just to buy, Legos is not for that. It's
it might be.
Well, yeah. But it usually is because hey, I want to pay off some debt, and that's a Christmas gift to my wife, or I'm gonna take some cash out because I'm gonna finally redo the kitchen for her and things like that. So
those are the smart people.
Those are the smart ones, yes. But in this market, you go get a home equity line of credit because if you got a rate of 3% or even 4% or below, don't touch it.
Yeah, wish my dad would have did that. He did a HELOC back in 2008, 2009, and wrong time to do that. Yeah. He went to El Salvador, then came back with the market, crashing on him. He's like, dang, I should not have gone to El Salvador with this money. Yeah, but we all live and learn, right? So he still kept the house. He saved out.
Good, really good.
So let's get into the real estate hot. Or not.
Mm-hmm. What's that?
You gotta do it. I'm excited, man. You gotta
do it again. Do it again.
That shit was dry.
All right, let's roll. Let's
get into the real estate hot
or not.
Okay.
What'd you think about that?
That sounded dope. That sounded dope. Y'all can do it again though. Y'all can do it.
You wanna do it?
Do it one more time.
Dancing monkey? Let's dance. Here we go. You ready? Do it again, boy. Okay, yes, sir. Here we go. Ready? Let's get into the real estate hot
or not.
There you go. That sounded dope. Yeah.
Okay. We be at home practicing on the phone.
So
we're gonna do some rapid fire would you rather, then we're gonna get into the comment section. So first thought that comes to your mind. What do you think about that cigar, by the way?
That's dope. I've never smoked a cigar, so this is my first time smoking a cigar.
You're smoking one of the best cigars. So this is the Undercrown. It's an Undercrown, but it's a Connecticut wrapper. Normally I do the darker Maduros.
Dang, so these are based off a whole lot of stuff.
Yeah, man. It's a whole world. It's like real estate. It's like a whole thing. Yeah. You know what I mean? So yeah, it's about the the type of tobacco, how they wrap it, whether they use long leaves to wrap it or short leaves, how they chop up the tobacco on the inside, whether they use long leaves or short leaves, the wrapper, whether it's a darker color or a lighter color.
Gotcha.
Then the shape of the cigar, you've got your angle tip, and then you've got a more Robusto type of cigar. This one's a Robusto. Because it's a little bit a wider gauge. Huh?
That's number 3 on the wall.
Oh, okay. I see.
Oh, yeah, exactly. Oh, I should. Oh, yeah. That's actually work. I forgot about that. I actually use that just to cover up the electrical panel.
I know. I look at it every time.
Yeah. I was like, oh, that fits on there. All right. So that's enough cigar education. Would you rather wear the same socks for a month or wear the same underwear for a week?
Double pew.
Damn. I'd rather do the underwear than the socks, dog. Yeah, my feet.
I need clean drawers, man. I'll take the socks.
No, man, I walk a lot, and my feet be kicking after 2 days. Yeah, after one day I did it by accident. I wore the same socks the next day, and then I was like, yo, what stinks in here?
And it turned out to be
it was me. I was like, holy crap, I can't be taking off my shoes during these property tours. That's crazy.
My feet don't stink too bad.
Mine neither.
So, I mean, and I guess, are we assuming that we're not going to wash? Because that plays a factor, but I'm going to assume that I will wash.
Yeah, same here.
So I'll wear the same underwear. No, I'll wear the same socks because my underwear, I need to change them. My wife Latina, she be making a lot of spicy foods, and
Oh, you be having them boo-boo underwear.
Yeah, you know what I'm saying? I ain't trying to walk around the boo-boo baby.
Oh.
Well, you smell like boo-boo. Like my son. Be like, you made a boo-boo. You made a boo-boo. Come here. He be like, no, I didn't. And he's like, come here, let me smell that boo-boo. You know the craziest thing about parenthood? You'll see when you have a kid, you have to actively, here's the thing, you have to actively put your nose in their diaper and smell.
Bro, yes.
And it goes to your your amygdala. It goes all the way up your brain. It hits you in your eyeballs. You be like, oh my God. Come on, let's change
this
that.
This is not my son,
right? Your son will have to. He will. You'll see. He'll be like, you took a boo-boo? All right. So enough boo-boo talk. Would you rather Work an overtime shift with your annoying boss or spend a full day with your mother-in-law? I'll take the boss. I love you to know.
I don't have a mother-in-law, so I'll do the mother-in-law just because I don't have one. So
technicality.
Yeah.
So you'd be spending the time with nobody.
Exactly. Or I can spend time with strangers all the time. If I just happen to meet a girl and she's like, "Hey, you want to hang out with my mom?" I have no problem.
Do girls do that? Are they doing that these days?
No.
Because you're dating, right?
Yeah, I'm dating. But
did they ask you to do that?
No, I've never had anybody like random.
Well, that was hot now.
I've had somebody like been like, "You want to come over to my place?" and then their family is there, and I'm like, "That's weird," but I'll do it. Yeah,
they trying to get you kept.
Yeah, I'll do it. I mean, I have because all it is to me is like, "Hey, I'm a real estate agent, so if you want to
lead generation,
yeah, you want
to
and everybody talks about real estate, so the conversation just naturally goes.
Everybody
that way.
wants to know about real estate, dog.
Yeah.
I'm gonna hang out with Miss Bobby. She's in Miss Bobby. You know, she's in Vero Beach, Florida.
Miss Bobby and Mr. Steve.
Yeah.
Plus, he's on camera, so he has to.
Yeah. See, he's a smart man.
But she cool though. She's a trip. She's a good time. So,
would you rather have a sing off with Ariana Grande or have a dance off with Rihanna?
Rihanna, 100%. I don't even know how to dance, but I'll just.
I'll hang out with Rihanna. No, actually, I like Ariana Grande.
I like Ariana, but I'd rather hang out with Rihanna.
Ariana Grande.
I ain't got nothing but a two-step, and I do sing, but I can't.
You do the two-step?
Man,
I can do the two-step. That's all I got.
You want to have a dance off?
Here's the thing: Rihanna's just balling so much. I feel like Rihanna just be like, "Look, I'll pay for the dancing lesson right now." And then
yeah, I said I'd probably sit there and just listen to Ariana. So let's just go ahead and I'll just two-step with Rihanna. You know, around in the vicinity of Rihanna.
I'll just do anything to be around Ariana Grande. So
Next one.
I'm a clean trash around Ariana Grande. Yeah, sure. Sign me up.
Next.
Would you rather always have BO and not know it, or always smell BO on everyone else?
Oh, I already do the smell the BO, so I'll do that. I'll stick with that because
you smell everybody.
Yeah, it's crazy how many people just out here don't sense their own scent, like their own natural scent. It's crazy.
Yeah, I go with that one too.
Yeah.
Since everybody else, like I can't walk around stink.
I'd rather walk around stinky. I don't want to smell stinky people. I don't care if I can't smell myself. I'm happy. Like, hey, don't be around.
Stupid.
So let's get into the comments section. What you got for us, Coach?
Well, I talked about the guy. Shout out Sean Washington in Detroit. He actually gave us a shout out and said that he's been watching us, and he loved the comments and the content. But I did have a question from one of the guys at church, and he's like, "Man, I want to get into real estate." And I said, "Well, what do you want to do?" And he's like, "Well," he jumped right into the lending part. I said, "Well, what is it?" He said, "I think a lender is somebody that gives money." I said, "Okay, so what do you think a realtor does?" And he's like, "I don't know." So I was like, "You need to figure out what side of the transaction you want to be in, because both sides are, outside of the client, the realtor and the lender are the most important pieces of the transaction."
Right.
So figure out what side you want to do. But really, the comment is he wants to know what are the benefits and what are the primary responsibilities of a realtor. And I'm like, well,
tell them to tune into this episode. We talked about it at the very beginning.
I figure I got an expert right to my right and left. So
yeah, well, we are having a first-time home buyer seminar coming up on April 11th.
That was slick.
You like that?
That was slick.
A little transition for you.
And it ain't
nice
the 11th,
nice little tune in.
On April 8th. Yeah, the 11th was the fake date.
Yeah.
We're having wait, what's my name again? Oh yeah, there we go. Okay, I'm here. April 8th, we are having a home buying seminar in Tinleytown. The link will be in all of our bios. It's going to be in Tinleytown. We're going to be talking about buying, selling, investing, down payment assistance programs, how to get your closing costs taken care of. We're going to be talking about lending programs.
Credit,
how to get your credit right. We're going to be talking about HPAT, EHAP. We're going to be talking about everything that you're going to need to know, that you would want to know to get you straight into a house this year, next year, 10 years from now. Come on out. Make sure you register for that. Nelson, you having an event too? Any announcements for us?
Yeah, sure. That was the date that you were thinking, April 11th. That's my seminar.
Oh, is that why I said the 11th? Got it. Okay.
Good save, Nelson.
That was my seminar day. But that one is all in Spanish. So if anybody here is trying to learn in Spanish, we have a seminar in Spanish in Rockville. That's going to be at the Homespire lending office over there. But yeah, tune in with us. Definitely, basically the same thing that you're going to cover. We're going to cover too out there.
Bueno, si quiere aprender de bienes raíces, llegué a la reunión.
Yeah, llegué a la reunión abril 11 a las 6 de la tarde.
Claro, dale.
And your wife is Latina, right?
Sí, mi esposa desde Venezuela. Y mi suegra también.
Y'all see how I'm looking right now? Because I don't know Spanish.
Sí, gringos.
I think I know what that means. But.
Well, thank you guys so much for jumping on to the Real Estate Wire podcast. We really appreciate you guys. Make sure to like, subscribe, and hit the notifications button if you're watching on YouTube so that you're the first to know once we drop new videos. Go check out our past videos. Nelson Fuentes, where can they find you? ¿Dónde puede encontrarlo?
You can find me on Instagram at Nelson's Homes or my personal Instagram, Nelson Fuentes. You could also email me, text me, nelsonfuentes@kw.com. And then my info, I'll probably just shoot it over to you so you can put it in the YouTube or the podcast description. Is that how that works?
Okay. Good enough.
Cool. And then back to that question. Was that what was the question one more time? That your friend had?
I don't even know.
It was about
what do real estate agents?
What do real estate agents benefits and stuff?
Yeah. Like what's the primary responsibilities?
I mean, the primary responsibilities is mainly just showing, educating, and as well as writing the contracts and getting them in the property per se. A lot of times they just don't know how to get into the property or see the property, access the property, because a lot of agents, they just list the property on the market. They never answer the phone, at least to strangers, and so a lot of times we're already done transactions, or we already know these real estate agents, so of course they're always going to answer the phone, usually for a real estate agent, or we have other means of reaching out to them if they don't answer the phone. So reaching out, like going above their head, maybe going to a broker or maybe going to somebody on their team to try to figure out how we get access to this property. I'd say the benefits of being a real estate agent is, one, you're self-employed. A lot of times I'd say if you're working in a different brokerage, you might be an employee, or if you're working under a team, you might be an employee, but most of the times you're self-employed. You pick and choose who you want to work with. Essentially, you could work with anybody that you feel is a right fit for you. You don't have to work with anybody that has money or anybody that wants to do a transaction.
Yep.
Because sometimes those people that do have all the money, they require a lot of attention, a lot of. They're very, what's the word?
High maintenance.
Yeah,
I think that's what you were trying to say.
Yeah, high maintenance. maybe needy a little bit. Yeah,
sure. Very particular. They know exactly what they want.
Exactly.
They've been through this experience a few times.
Exactly. Yeah. So I mean, you could, especially if you're a new agent, you could start off with doing rentals, like we were talking about earlier. You could start off with doing rentals, and so you could build your business that way, and then just keep meeting people, networking, and socializing, and building your brand that way. But other benefits would be, the time, having your own time. You could pick and choose your schedule. I particularly like working every day, so that's me. And not every real estate agent does it. I'm not sure about you, Dan, but
I work 6 days a week.
Yeah,
I take off Sunday.
Yeah, so like I said, not every real estate agent, but I'm sure you were probably grinding and hustling when you first started, and you were working like every day, 7 days a week. Yeah, sometimes that's probably the downside of being a real estate agent, is that when you're first become licensed, you're probably going to work every day. You're going to chase a lot of leads. You're gonna because you want to. That's the only thing you get. That's another downside. Is the only way you get paid is by
eat what you
give. Yeah, you got to produce.
And then you got to build a team. Where can they find you, Coach Marcus? We wrapping it up
on social media at Mortgage Coach Marcus and at Fields Mortgage Group. Website is getting ready to launch. Let's get ready to go up.
Love it, bro. And I am Dan Wheeler, sells homes on all platforms. Thank you again so much for tuning in to the podcast. For all of us here at the Real Estate Wire, we are out. Solid, bitches.
That was dope.
Yeah, man. Boom, 55 minutes.
That was 55.